Welcome everyone to the Everyday Trader. This is Greg Jensen, CEO of Options Animal. Glad to be back together with Eric.
CEO hey everybody, this is Eric Hale. I'm founder and CEO of Trader Oasis. So Options Animal is a place for retail traders to get education and learn about how to trade and make decisions, manage portfolios for themselves. And a Trader Oasis is a platform for people, for those sort of people who want to trade. Yeah, and we're here to talk about, just what's going on in markets, talk about some stuff that's in our lives, some stuff that's related to the markets, and some other stuff that's just kind of interesting.
Well,
so
I know
what have you been up to, Greg?
Last time we left off, you were going on a bike ride.
Yes.
So I know you guys who are listening to us don't really care about this, but I do. So, Eric, how was the bike ride?
No, it's interesting. I think people are interested. So I did there's this thing called RAGBRAI, which is the Register, which is the Des Moines Register. It's a newspaper, registers annual Great Bike Ride across Iowa. And so you start at the Missouri River, you dip your back tire in the Missouri River, you dip your front tire in the Mississippi, and then in between that, you ride 500 miles. So it's a ride through Iowa, which a lot of people think is flat. And I saw a T-shirt that said Iowa's flat like a waffle. So it's a lot of rolling hills. We went through the northern part. So we started in Sergeant Bluff and made our way to Lansing, which is the northern part. Beautiful ride. 15,000 registered bike riders. And then an additional probably 5,000 they call pirates. So they're estimated to be over 20,000 people riding on any given day, plus support staff and stuff like that. So it's a.
So did the pirates like make sounds as they were going by, like "arr," pirate sounds?
Yeah, they're the people that they ride because there's nobody checking your wristband to make sure. But it's a fun time spent. This is the 49th year that it's been around. Started with 300 people 49 years ago. Next year is going to be a huge year, 50 people, 50-year anniversary. So it'll definitely sell out. Definitely something I'm going to do for the rest of my life. It is. I rode with a guy who's 72 years old. His name, by the way, you love this guy. His last name is Blue. So you know what I was saying, right? Nice. My boy Blue, 72 years old, and the guy there's an optional century, so you can do 100 miles, and he crushed it. The guy is just a machine, and he's real inspiration. So a lot of fun. So it's a good time. But I also got something else while I was there, on top of, the satisfaction of finishing the race and riding every mile and doing a great century ride, is I came back with COVID.
First time, right?
First time with COVID, and I got I don't know what the diagnosis was, but I have to assume that it's the Omicron variant, because I had 2 or 3 days of fever and feeling achy and crampy. And you notice, I don't know if you noticed my voice is different. I'm tested negative twice, so you can't catch it on this webcast. But I did. My wife is saying, "Man, your voice sounds different." And so she and I both got it. And by the way, they say you can't get it outside, but if there's an environment where you would get it, just imagine 15,000 bicyclists, tire to tire, shoulder to shoulder,
breathing heavy,
huffing and breathing heavy. That would be where you would get it, because I'm going through the air of everybody else in front of me, and then there's a little bit of that going on, and then some of this too. So the single nose snot rockets. So you try not to, you don't have a choice of avoiding that. So yeah.
So you're back on the mend though. Glad to hear.
Yeah.
Good. Definitely a different variant than I got. I got COVID. Well, it was before the vaccines existed. This was back in November of 2020 when I got it, and it was mean. It was mean. Fortunately, I've been able to stay healthy since then, and hopefully that virus is. I know we'll never get rid of it. It's becoming an endemic thing, right? It's no longer pandemic, and we're learning as a society to live with it, and hopefully have better health habits, and be more cognizant of who we're putting at risk, and can live with it going forward. But there are some real economic impacts of it too. I know we talked a little bit about that last time with long COVID and what it might be doing to the job market. But
are we going to jump into that? That's like
no
major topic, and it's part of one of the agendas of the next. Well, My big thing that I want to talk about, this is the real reason why we want to get together and talk about, and I'll say it right now, is Camp Kotok. So I went to Camp Kotok in Maine this year at Lean's Lodge, did some great fishing. So I wanted to share some of that. But what about you? What's happened before we jump over there? Anything? How's the garden going?
I've been growing vegetables. I'm actually enjoying the summer. It's been a very relaxing summer from that standpoint. And I've tried almost everything. I've learned I'm not very good at growing a few things. I'm not very good at growing celery. That's a tough one. I'm really good at growing turnips. I've got, turnips the size of my head right now that I just pulled out of the garden last night. But yeah, we've tried everything this year, from potatoes to corn to tomatoes, beans, zucchini, you name the vegetable, and I'm probably growing it this year. So
we tried broccoli for the first time this year. We have a couple small little gardens, and what we've got is this big, huge thing, and just little bits of broccoli. I don't know what we're doing wrong.
Well, the problem is, and it's been the same issue here, when you're growing broccoli, if it gets too hot, it just focuses on the plant and doesn't grow a lot of the fruit. And so there are ways to slow it down. You can put shade cloth over your broccoli to kind of keep it out of the direct sun and cool it down. But what you'll notice too is, if you keep the plant healthy, as soon as fall starts to approach, temperatures start to cool down, your broccoli is going to start exploding.
Okay, well, that's good to know, because we got broccoli that's 2.5 feet tall with the broccoli spears at the top, or you get maybe out of I think 5 plants, maybe a serving, maybe 2 servings we've had out of it. So, well, that's good to know. Thanks for that.
Other than that,
you did something else. What else did you do?
I've enjoyed the summer.
I did in the wilderness.
I did. I went camping a few weeks ago. It was fun. Took my family up to a high mountain lake in Idaho. It was about 9,200 feet is where we were at, and oxygen was a little thin. I'll be honest. I felt a little bit of altitude sickness when I was up there.
Oh, for sure.
Which is weird, because I already live at about 6,000 feet here where I'm at.
You're already there,
but it was I don't know. Maybe I'm just getting old. Maybe that was.
Well, back to COVID. My lungs definitely feel different. My wife, like I said, we were both coughing, and Joe Kerner, one of our compatriots at Options Animal, he and I sort of challenge each other on Peloton, and he's been set back since he's had COVID twice now, and his lung capacity is not as good as it used to be. So that might have been it. The fact
very
that
likely,
the air's a little bit thinner when you get up at that elevation. So maybe,
but it was beautiful. I mean, absolutely stunning. We caught fish after fish after fish on this little pristine lake that is fed with nothing but snow melt. It's up there, and in fact, there's still snow. End of July, first part of August, there's still snow just not far from where we're camping. So it got cold at night. It was nice, but
you're fly fishing, right?
Yeah. Yeah.
Of course. All right.
Well,
if you want to talk about any economic stuff, excuse me. I'm just moving around. That's what I do. This is why I'm not on CNBC, because I move around a lot.
Yeah. Well, yeah, let's jump into it, because there's also been a lot that's happened in the market since we've left. Since we've talked last, the markets have been on an absolute tear to the upside.
Yeah.
For the last 2 weeks. And I know I'm trying to remember if you tweeted something. Oh, no.
No, it was my quote in the Wall Street Journal.
You got quoted. Yeah, I was going to say you're quoting the Wall Street Journal. I want to, you threw something out there. Let's jump there. You got put in the Wall Street Journal. For those of you who missed it, we'll put the link in below the podcast, or the podcast channel down here. You can go click on that and read the article later. But what are your thoughts on this rally? Is it real? You kind of insinuated that in the article, right?
I did. So actually, I pull up the link. Am I sharing the screen? Let me see if I'll share my screen over here. So there we go. Yeah. So, I am. Let me log into the link. We could. Sorry. Yeah, there you go. Sorry, I thought because I was sharing this link with people and they weren't having to log in, but so yeah, this is me right here. So traders are looking for reasons not to believe in this rally, said founder of Trader Oasis. So yeah, I really think this is a real bounce. I think a couple of reasons why, we could dive into it deeper. And this is the thing about quotes in the newspaper is, part of the reason I think for it is valuations. If we looked at the PE ratio, the PE ratio has come down on the S&P 500 to a place that's not crazy high. I mean, it's closer to if you go back 30 or 40 year average, we're pretty close to the PE ratio there. So, we're reaching a point where there's valuations that are reasonable. And I think people are buying. And certainly if you look at something like, Apple is a fantastic, here's the S&P 500, this rally, but Apple, I'm sure you've looked, this hasn't escaped you. If you look at chart Apple, this thing has just been, somebody turned on the switch. We're here at 128 and said, we're buying. And I'm pretty sure that's Warren Buffett. This is a really interesting technical pattern that's happening there. Be careful jumping on the board of one of these, but
I was going to say we're only what, $6 from an all-time high on Apple?
Yeah, I think 182 all-time high. So I don't know that I'd be buying it here. In fact, I'd probably be doing something different here. In fact, this is my week to share a trade with people. So I want to share a trade. I think it's going to be Apple. It might be something else that we talked about. But the thing about quotes is, so when the reporter asked me, so what are you trading? And I said, high quality, large cap companies that are in the S&P 500. And she said, oh, like ExxonMobil. And the truth is, and maybe we'll talk more about this with ExxonMobil in the discussion because of some of the things that came out of Kotok. Long story short, the big large cap oil companies are closely tied to the price of oil. I personally don't like trading commodities because they're hard to predict. And I think that's great if people trade them. I don't have any problem with people trading oil or oil companies. So I tried to explain that there's volatility in the price of oil that will affect and that's arguably why we've seen such strength in the energy sector this year, is the price of oil going up. So, I don't, there's a long discussion. The other side too is, I have a solar roof, I drive a Tesla, and I'm also a libertarian. So, I take personal accountability for your actions, and I decide not to invest in carbon producing industries. So believe me, I've had several of my friends who are upset with me for saying this. I'm like, hey, listen, you guys know me. You do what you want to do, but the way that I trade, I don't need to keep looking for new stocks every time. I think one of the things that's different about what we teach is we have more than one tool. So stock traders buy stock and they only buy and sell stocks. So they have to go find the right equity to trade because you only have one strategy, buy stock. I'd rather pick an equity that I can understand and pick the strategy that works. It sounds like a much simpler approach to me, is that I say, okay, I'll trade Apple. And like I said, right now, I think Apple's probably going to find a top here. And that's the way I'm going to trade it, rather than go find what's the next equity that's going to go up. So anyways, that's kind of a short story as to why that went there. And she let me read this at a time. I said, that's good enough. That's fine. So anyways, I'm not anti, let people trade what they want to do. And I think people should make their own decisions.
Well, I think you make an important point there, and I'll just jump on that same bandwagon of, I think too often investors, everyday investors, everyday traders like you and I, when they first jump into learning about the market and wanting to put money to work, they think they need to trade the whole market. And I think that's a mistake. I think if you bounce from stock to stock or sector to sector, or, currencies to Bitcoin to ETFs, you don't do any of them very well.
Yeah.
And to do really well at something, you have to understand it. You have to put in homework. And so, yeah, it's a good idea to know 10 to 12 to 20 companies and just look for opportunity, because it's always there.
I don't want to say I'm lazy, but I'm about efficiency. That you're getting emails from me at 1 o'clock, 2 o'clock in the morning, because I'm up thinking about stuff. And so if I can do anything to help minimize the amount of effort to get the same results, and I've had a phenomenal year this year, so I am way up above the index. And people who are inside of our community have seen the trades that I'm doing and know that it's working. So it's a lot, and it's just easier. Like, you don't have to go out and try to, look at the entire sea of stocks and pick, there's 8,500 equities you can pick. Go find the one you think is going to go up. Chances are, by the time, like, go to that Apple, it's already up. I mean, I don't think now's the time to be buying Apple, but it was,
it was a month ago. Month and a half ago. Yeah.
But that doesn't mean you can't trade Apple. I think there's a really awesome set of strategies you could do on Apple. But,
I agree. I actually, we'll save my positioning in the market till later. Let's talk about Kotok. Let's talk about
one other thing. Did you want to talk about the retail numbers today?
Oh yeah, let's talk about current stuff. Retail sales. The headline number missed the guidance. People have tried to dig into some of the details and try to point out that, the only reason retail number missed the guidance was that gas prices were down, which is true. Gas prices were definitely down from month to month, and that's been a good thing for retailers. However, I'm going to reference a report that you forwarded me over this morning as well from Peter Boockvar. Because I have the same opinion. I think the only reason why the actual number is down is it's just tracking inflation right now. It's tracking price levels, not necessarily demand and increase in volume. So it's a good thing that retail sales are positive. It's a good thing that we're seeing the retail investor not pull back. The problem is you couple that on with, I'm going to say two different earnings reports over the last couple of weeks. They were both just recent. We had Target and Walmart. Target missed their number today. Not a very good looking guidance based on really they were writing down some inventories that they over leveraged, and they also were noticing patterns that the individual buyer coming in is more focused on spending their money on groceries instead of some of their higher end or higher margin type products because grocery prices have been increasing. So although their sales numbers were somewhat okay, definitely not a good report from Target. And I'm going to also reference Walmart's number from last week that yes, they beat their earnings, but it was an earnings number that was lowered twice already. They had already warned twice on their number for the quarter. So they beat their lowered guidance, which is, I guess that wasn't later. That wasn't last week. That was just earlier this week. It's been a long week already. It's only Wednesday.
Believe me, it felt like Friday when I landed. I came back from Kotok on Monday, so it felt like Friday on Monday. So this is a really long week for me. I did want to just loop back to Peter Boockvar and the book report. I subscribe to a lot of newsletters, and listen, I think these people are out there. Peter has one of the best values for a newsletter that I've ever seen. I've said this to Peter a bunch of times that you have a knack for being able to cut right to the chase. There's some great people out there with some really good newsletters. John Malden, he has a great newsletter, but the guy writes literally 13,000 word newsletters, and Peter, there's the whole thing. And he says everything that needs to be said. And Peter says, if I can say it in 4 sentences, I'll say it in 4 sentences. So if you're looking for newsletters to consider subscribing to, I don't get anything from Peter, no referral fee whatsoever. I told Peter I forward your newsletter to people, and he's like, yeah, that's okay. I appreciate that. Don't do it too much because that's how I get paid. So you see Peter on CNBC, his newsletters. I mean, sometimes I get one, sometimes none a day, sometimes 3 or 4 a day. I've already got another newsletter from him today talking about ZipRecruiter's reports. So he gives really good insight, really good analysis. That's I would suggest considering signing up, maybe do a month or a free trial with Peter at the book report. And it's BOOK report, Peter Boockvar. Really good analysis. So just throwing that out.
Hey, I'm just kind of thinking on the fly right here while we're doing this podcast. We should actually start sharing with people on the podcast things we're reading. Things that you and I are reading on a daily basis to make our investment decisions. And also, books we're reading. I know I've read some fantastic books in the last couple months. Yeah. I want to specifically talk about Morgan Housel's book, Psychology of Money.
Yeah. So I talked to Barry about that. And
oh, did you?
Yeah. So Barry Ritholtz, who's writing another book. And actually, he told me Morgan Housel, Barry writes a lot. Barry is awesome. If you read what Barry reads, if you hear him talk on Bloomberg,
he's talking with Barry Ritholtz, by the way.
What?
You didn't ever say Ritholtz. Barry Ritholtz. You just said Barry. Okay.
Barry. Okay.
I want to make sure.
Does he need Barry Bonds? Does anybody need to use anything other than Barry?
Well, you got Barry Bonds out there. You got
okay, Barry Bonds. Okay, yeah.
Maybe Barry Sanders.
By the way, this is he's my
Barry Sanders.
He's my Barry Bonds. Like going to Camp Kotok is like going to, an all-star event where you can, hang out with people. But yeah, so we talked about Morgan House's book. This is one of the questions that when I go to Camp Kotok, what I want to do, or these events, like you and I go to the insight of, how people are analyzing and thinking. That's what I want to see. And I did ask that question just about everybody. What are you reading? What's on your bookshelf? What do you recommend? And so a lot of the standards are there. Thinking Fast and Slow, of course, came up. We talked a lot about that. Barry talked about Morgan Housel's book, which is The Psychology of Money, which is a must read for anybody listening to us right now. But Barry's writing his own. And he said Morgan told him that most of what is in his book is a series of blogs that were edited and put together. So Barry's working on a new book. And his last one was The Bailout Nation, which is about the GFC and but I'm really excited about this next one because I could have spent the entire 5 days just talking to Barry Ritholtz, because he's got such an incredible guy's encyclopedic. And he's just one of the people it's all people of his ilk that are there. We'll talk about Bianco too, Jim Bianco, was also there, who's phenomenal. There are a lot of other people that were there we can't talk about because it's Chatham House rules. By the way, Chatham House rules. You want to explain what Chatham House rules is?
Chatham House rules is practice has been put in place. It's been around forever, but it's really a practice that is meant to prevent the publication of ideas and concepts that some individuals who can move the markets with their opinions, specifically Fed governors, big bank presidents, maybe elected officials. All of those people can potentially have an impact on markets if what they said in a private conversation gets published. And so it's been created to allow still conversation that may be a little bit opinion based to have a meaningful, productive conversation with others of the same thought, so that it doesn't necessarily get published in the Wall Street Journal the very next day and move the market. So Chatham House rules are, you can talk about the concept in general. Yep. You just can't tie it to the individual who said it.
So Chatham House is in the UK. It's been around forever. It's a policy institute where economists, policymakers, and people in the investment community get together and have, let's just talk the truth and let's share our opinions. No judgment, no hyperbole or arguing. And so the concepts can be shared unless it's otherwise stated. You could say yes. You can't go out and say, "Oh, Eric Hale thinks that inflation is going to go down." So, but we could say the general discussion here. There were people there, and we discussed. Now, I've mentioned names of people who were there, but those people have publicly acknowledged that they're there. So I'm not misquoting anybody. And some things are on the record, or some things are off the record. The other rule that applies is the Jackson Hole rule, which is if you overhear a conversation you weren't supposed to overhear, you don't repeat that. So Chatham House and Jackson Hole, which is coming up. So the Jackson Hole meeting
next
week is, and this is, by the way, there are policymakers, people who are going to Jackson Hole who were here at this meeting. So it's that ilk of policymakers, people who vote on policy rates were at this meeting and spoke very candidly. So I talk about drinking close to the source. Maybe you've heard me say it before, but if you want to try and drink as close to the pure source of water as you can, so you don't get contaminants. And that's what I try to do. That's why we do this, why we participate, is we try to share this with the community, not through channels where it's filtered or maybe the telephone game, somebody tells somebody else, the story's different at the end. Not that it's intentional, but Ben Hunt, who's usually a regular at this event, talks about narratives and how they change. And so the further upstream you can get to the source, the less sort of mutation you get of the story, I think is probably the right words here. So Chatham House rules. So Camp Kotok, let me pop up some pictures. You good with that, or we good to go there?
Yeah.
So I just thought this was a good shot. This is my first picture of the trip. So just a couple of guys who are actually investment bankers. I'm not going to share their names, but just, two guys were there and I thought, hey, it's a great shot. And I shared it with them like, thanks. So this is my guy, Jesse. This is where we took off to go. This is called the flowage. By the way,
not seeing pictures.
What's that?
Not seeing pictures.
Oh, yeah, there we go. Okay. So, well, that would help. I'm looking at the pictures. Can't you read my mind? All right. Okay, so here's a couple of guys, pretty cool guys. I don't have their permissions. I'm going to share their names, but yeah. So here's our guy Jesse. Jesse's been around guiding for a while. She works for the Department of Wildlife. So sometimes she's checking fishing permits and checking boats for invasive species. But this is the put in we're heading in. We fished for about 45 minutes, and I said, Jesse, my feet are wet. They handmade their canoes are handmade, made by locals up there. They use canoes most of them use canoes with a motorboat. And I pulled back. There was a little rug on the bottom to keep from slipping. And there was about an inch and a half of water in the boat. So I ended up jumping on another boat. I actually jumped on the fishing boat back with these guys to finish while Jesse took her boat back and got that problem fixed. So this is Emily Taylor. And by the way, Les Williams, who's 80 years old and still guiding up there. He was my guide last year. The guy every other guide has a fish finder. I don't know whether Les wills the fish to be there or he can smell them, but Les goes and finds a spot and everybody follows Les. And here you can see, this was just after a few hours. This is Emily Taylor from Solve ME. And I want to talk about that first because so David Kotok from Cumberland Advisors, one of the things that David does is to bring issues to the forefront. So he sees part of his mission is, I don't want to put words in his mouth, but I know that he does this, is that he takes on certain issues that need more attention. And so Solve ME is focused on what is effectively long COVID. So COVID causes, for some people, somewhere between 15% of people is the estimate. 15% of people who get COVID will have some form of long COVID. Now, I talked to you about this a while ago. Do you feel like you have long COVID? You still have symptoms?
I do. I think probably the biggest thing I feel is exhaustion still. I still get exhausted really easily. And again, it was 2 years ago, almost, that I had COVID. So
Emily is making a significant dent in this universe. She was able to raise $1.2 billion to put things into perspective to do research into long COVID. So the estimate is that 15% of all people who get COVID are going to be impacted by some lingering sort of symptoms. But 5% of those people are going to be, I don't want to use the word disabled, but somehow lesser capacity to the point that it's going to affect their work. And if you think about 5% of the workforce, that's very interesting.
That's just what I was going to ask. Is it 5% of the workforce or is it 5% of the 15%?
No,
that get long COVID.
So 15% of people will get some kind of long COVID, and 5% of all people are likely to have somewhat diminished to the point that it affects their productivity.
Yeah, that's a massive number.
It is a massive number. And this is the reason why. And this is Congress that paid her. She actually told me, and I don't have the numbers right, but she was going in for like $300 million. And she said that when they read her proposal, they said that it was important enough that it deserves $1.2 billion to help identify this. And now she talked about that they are identifying, they've made significant progress in being able to isolate and determine what's going on. And I think part of it is, I don't know, this discussion about there's these microclots of blood that are microclots that are affecting the capillaries. So they're identifying the causes of that, being able to identify it and hopefully make progress. And by the way, this is the same disease that you get from Epstein-Barr or mononucleosis or other things. And there was there were some other people there talking about this. So it's real. It's, we all know people who've been affected by this. But this initiative, Solve ME, or it's also CFS. The names you could go to Solve ME or Solve CFS.org. By the way, they weren't asking for money. They got enough money, but they're trying to raise awareness to this important issue, which hopefully people like Emily are the reason why we're going to see some progress here. So keep a look on Solve ME, Solve CFS, and see how that's progressing. That was pretty exciting to see there. And she did a pretty good job catching fish, but not as good as me.
Dude, your picture's amazing.
Yeah.
Do you have your picture? Yeah, there we go.
Yeah. So we went to where Les Williams was fishing and parked our boat, and it was fish on, put the line back in, fish on.
So were you fishing with bait? Were you fishing with spinners?
Yeah, this isn't your kind of fishing. So we got sinkers. We put a worm on a hook.
Nah, that's fine.
You go down to the bottom about 30 feet. You give it a few cranks, pull it off the bottom, and we pulled in a whole bunch of perch. Largemouth bass is an invasive species here, so you can catch all the largemouth. You can catch smallmouth. There's a limit to the size you can catch them. So this was just bottom, and we found a hole, and the temperature, the weather was conditioned, was right to the point that we said, okay, we've got enough fish. So this is me and two others, but to be honest with you, I was the better fisherman in the group. Everybody agreed that I caught pretty more than my share of the fish. And that was all luck. It was just, I think it was luck, because there were good fishermen who were with me on that boat.
That's awesome.
Yeah, this is a photo, not what I want to show you where we are. That's Canada over there. Just FYI. So that it doesn't look any different than here, but where we are is right in the middle of the Passamaquoddy Reservation, which overlaps. It's a Native American tribe, or a North American tribe, because it overlaps Canada and the United States. So we were in Passamaquoddy Nation. I just want to take a picture there. That's Canada right there. So just to give you an idea where we are. Okay, so another issue. This is inside Lean's Lodge. You can see the trophies and the layout here. By the way, we have gourmet food that is out of this world. For breakfast, lunch, we're cooking what we catch, and some other stuff that's there for lunch. For dinner, it's a gourmet meal every night that is just like 5-star. The Weeks family does an amazing job of this, and you can see there's plenty of beautiful libations. I'll show you more stuff of that later. Not that we drink, although I will admit that I did imbibe a little bit here. But this is General Scott Gray, and this is Chris Corbin. I don't know if you notice here, but Chris is a double amputee combat wounded veteran. And I wanted to share, so this organization, the Combat Wounded Veterans, you were at the Bronze Buffalo Club, know that they were introduced. This is a very important organization that's trying to help bring attention to veterans. Listen, this is very serious here, so let me pause. 22 veterans kill themselves every day.
Yeah, it's a real problem. I've got and he won't mind me sharing this. I've got a brother-in-law who lost friends. He served two tours in Afghanistan, and another tour in Africa. I can't remember where, and in the Marine Corps, and has dealt with PTSD since then. He himself walked away from it, unfortunately unscathed, but his convoy got attacked, got bombed, and he lost good friends. And we have a real mental health challenge as a society right now for as many veterans as we have, young men and women who have gone over and, served our country and put themselves in harm's way, and they come back. And I'm not going to point it to the same level of hostility that was pointed out that happened to the Vietnam veterans that went on during Vietnam, but there is still a level of, I'm going to call it indifference. I think that we don't really, I don't think we just recognize them and the challenges that they're really dealing with right now. So I agree that this, and there's other organizations like this. This one, I believe, is doing a very good job of trying to help these individuals get their lives back and give them something to focus on and look forward to.
I'd encourage you to be listening to this, to pick your way to support this, whether it's thanking a veteran, especially a Vietnam veteran, because they didn't get the same welcome back that other people have. But there are people that are putting their lives and their bodies on the line for our freedom and safety. Chris was a sniper in the Rangers, and he was a weapons instructor. And it's story after story after story, just heartbreaking. But this combat wounded veterans has changed the lives of veterans. It gives them hope. They take the families and take them to do something. They either go scuba diving or mountain climbing or some other things. And I'm going to take a bigger role in this organization. I already reached out to some of the people, which are the people running this organization, pretty incredible. I mean, Scott Gray flew Air Force One. Okay. He had some great stories to tell, by the way, so I won't relay those. And then his partner that we met, Dom, who's an astronaut. He's been in outer space 4 times. And these folks are really passionate about this and trying to help. So I'm putting that out there. While I'm talking about other things, back to the lake issue, one of the issues that's happening in the lake, this is the third thing that David was promoting, is that there's a massive milfoil, which came from Asia. It's an invasive species which grows. And if some of you who have seen this, I know it's big in the Northeast, and I've heard stories about people seeing total lakes overtaken by this milfoil. And so there's an effort. The Down East Lakes Land Trust is looking to try and remove that. So those are the 3 sort of charity topics that were discussed there. So yeah, I don't want to talk too much more about that, but so other stuff. One other thing, this is the mayor, Francis Suarez, who is the mayor of Miami, talking about the miracle that's happening in Miami. You remember in one of the examples he used was that there was a congressperson from Northern California who said F Elon Musk on Twitter. Elon Musk said message received, and now his headquarters are in Austin, Texas. Not the only sort of business. We've seen a lot of businesses that are moving out of areas and moving to places like Austin and Miami. One of the, I live in Chicago, and the richest person in Chicago, Ken Griffin, has moved Citadel to Miami. And it's not by accident that happened. Francis Suarez, who's a Republican, but he represents, I think, a large swath of people in America, as he's in the middle. He was elected in a Democratic city with 85% of the vote. This guy is a rising star that you need to start paying attention to, because he has a message that is refreshing and what we need to hear. And I would not be surprised to see him on a primary ballot for president in 2024. So because he told me that he's considering running for president. If you get a chance to hear this guy, listen to him. He's great. I know this is, we're not here to, this isn't
all he has to do is put Tulsi Gabbard as his VP, and I got him.
Yeah, oh my gosh, that would be awesome. He takes his salary in Bitcoin. So he reached out when somebody said, you know what, we need to move Silicon Valley to Miami. And he responded, how can I help? And ever since then, there are so many businesses that have moved to Miami. Everything has happened. He's lowered taxes. He's increased services. He's addressing homelessness with mental health solutions. He's got crime down to the numbers that's back to the 70s. He's the first mayor to be born in Miami and to become, so he was actually born in Miami. His father was mayor of Miami. He is of Cuban descent. He brings a lot of great experience. So put him on the radar. He's somebody to watch. I think he's pretty awesome. It was refreshing awesome to be able to get him. By the way, there's Chris in the background, the wounded veteran. Here's a bunch of veterans who talked to, so I just wanted to share that photo. Here I am fishing again, just more fishing pictures. I don't know, have Doug's permission. This Doug Duncan, he's the Fannie Mae chief economist. Probably doesn't mind me talking. I mean, you see how, so this is how nerdy we are.
Who has a t-shirt with a chart on it? That's probably from Fred, right?
Yeah. No, it's not Fred.
That's
I said, it looks like a Fred chart. He's like, no, it's my chart. He's the chief economist from Fannie Mae. And we talked about housing. So he talked about the difference in supply and demand and the difference between these and why it changed. He's talked about this so much. He said, man, I'm going to have this made into a t-shirt. So I don't want to go too far down this path of what his point was here, but I did want to take some time to talk a little bit about housing, because housing came up as a discussion. And, one of the things that's we're seeing in housing is something quixotical. There's a dichotomy between building home builders and existing home sales. We all know, everybody here knows the price of your house has gone up. The value of your home has gone up. And we're seeing a big difference between existing homes and home builders. And how does it make sense that the demand is going up, but yet home builders have excess inventory? And I got to throw credit to Jim Bianco for this, because I'd like to get your thoughts too on this, Greg. He puts a lot of this on the work from home thing. And what's happened, and it's no secret that Apple and Goldman Sachs and Bank of America all want people to come back. Now, okay. So for those of you listening here, there may be a trade idea or an opportunity, sort of a narrative to think about here in this sort of discussion, if you believe it. First of all, the thought is that people are never going back to the office. What's your thoughts on work from home, Greg? Do you think is this permanent? Is this a temporary thing? Are we going to go somewhere in between? I'm out of the blue. I'm throwing a curveball at you, but what do you think?
I think it's somewhere in between. I think there's two sides to it, right? I think some employees are less productive at home. There's no mistaking that. And I think some companies are realizing that, as they give people the ability to work, and whether it's malicious or not is another question. I'm sure there's some fraud associated with, I'm at home working and really I'm not. I'm just clicking a button. I'm moving my mouse every once in a while to make sure my computer stays active if they're monitoring me that way. In reality, I'm doing nothing but, watching Netflix or hanging out with my kids. There's some of that's going on. On the other hand, I believe some people are way more productive at home when they don't have to deal with the 2-hour commute through traffic. Their lives are healthier because they're at home. And so they're a better employee and get more done. So I think there's a balance there. The hard part is, because the job market is so strong right now, I don't think all those companies that are trying to put the hammer down and saying, you have to come from work, you have to come back to work or you're going to lose your job. I think most people who are getting that ultimatum from their bosses right now are saying, fire me then. I'll go work somewhere else, because the job market is so strong right now. I don't know if that will continue if we ever see this job market soften. But for right now, the employee is in the control seat, I believe. So I think work from home is hard to enforce right now.
Well,
work from the office is hard to enforce.
It is. My wife's HR manager, they've got roughly 2,500 employees nationally. And, it was really quite a hard thing for them when they got hit by COVID, because they had call centers and people working, and having to transition everybody home was just amazing for them to be able to do that. And there is the issue, because she's got some pretty wild stories about what they've seen people doing. By the way, your webcam, if you got a company computer, your webcam might be on, and all of your email is recorded. So it's all archived. So they do have ways to sort of check in on you. But they announced that, this over the past couple of years, following COVID, we're going to go back on January 1st. And ultimately that came to pass. We're going to go back on June. We're going to go back in September. We're going to go back next February. And every time they've done that, every time they put a line in the sand, they lose people. People quit.
Yeah.
So people are and this is what's happening. Goldman Sachs has said, apparently David Solomon went off because he was at a restaurant in the Hamptons during a work day, and a bunch of junior employees came up to him and said, "Hey, we just wanted to say we work for Goldman Sachs and it's good to see you." And his response was, "WTF are you doing here on a work day? You should be in the office. Why are you here in the Hamptons?" Of course, nobody asked the question why Solomon was there. Solomon didn't ask the question, who, by the way, spends 50% of his time in his house in the Caribbean and working from there. But So different rules for different strokes for different folks, but he's mandated. We're going back 5 days in the office. It's not optional. And what's happened is people have quit and gone to work for Carlyle Group or some other big bank. And the young people are saying, no, well, the young people want to stay. So those people there tends to be this bathtub. If you look at the age, younger people want to be in the office, older people want to be in the office, but people from their late 20s to their 50s, early 50s, they want to work from home. And that's what's happening. It's changing things, which is having an impact. So back to the housing thing. So 2 thoughts there, by the way. So before I go to the housing thing, is the commercial real estate thing. So you and I were at the Rocky Mountain Economic Summit. We heard who's probably the largest commercial real estate company in the world. I mean,
Mr. Cushman.
I wasn't going to say his name, but you did. So Cushman Wakefield.
He wasn't. That was a publicly one. That wasn't.
It wasn't Chatham House.
That wasn't Chatham House. Yeah,
okay, that was public,
part of his public speech. Yep.
But he's convinced that all of the offices are coming back. That this office, because that's his business. I mean, but then again, there's this saying, and I'm going to get it wrong, but you can't convince somebody to believe in something that their job depends on it not being true. So, I mean, that's his business, his office space. So I don't think he's going to, everybody, Jamie Dimon and Goldman Sachs and everybody are saying you're coming back. We're going back. Well, I don't know if you knew this, but Goldman Sachs has, I'm going to call it a capitulation. In order to, they're steadfast that you will work full time in the office. So what they've done, sort of as I don't call it a compromise, call it whatever. They've gone to unlimited vacation. So, okay, you have to work in the office, but now you have unlimited vacation. So but you still got to get your job done. So if you only work in the office, and if you're not in the office, you're on vacation, but you still got to get your job done. So it's a cop out.
I don't understand why people think that works. I mean, seriously, unlimited vacation?
Yeah.
Let's call it something else and still let you work from home. And maybe that will make you.
My son, there was an investment banker who said their company did the same thing. And and let me put it in perspective. His wife is pregnant and due in 2 weeks. And so he put in that he's going to take a week off and send it in to his boss. He's like, we have unlimited vacation. So I'm going to take a week off to be with my wife and my new child. And his boss said, well, I only took a day off. Well, okay, good for you, but I'm going to take a week off and he's like, I don't know that you need to take that time off because, you should be able to see the birth, but I only took a day off. So he's like, message received. I'm only going to take a day off now because I have unlimited vacation. And my son's company, he works for an advertising agency. He's a project manager for a major company. They did the same thing. And his reaction, my first reaction was great. He says, no, not great, because now I'm expected to work on my vacation days, where before, if I had 2 or 3 weeks of vacation, I take a vacation day, I'm on vacation. Now I have unlimited vacation. If I take a vacation day, I'm expected to work. So that's interesting impact. I wonder how the commercial office space thing is going to play out. I think you've seen some commercial real estate REITs. I don't trade REITs, but getting pounded because of this. I don't know. I don't know if it's going to get better. I mean, I'm of the mindset that this group's never going to go back to work. And like I said, I don't know if I finished story. My wife, every time they had a deadline, so they've said people quit. So they're like, no more. Everybody's going to work from home. That's the way it is going forward. And she works upstairs in her office and she'll never go back to an office, but they still have office leases, which they're going to get rid of.
I think the commercial spaces are still a struggle. So yeah, from an investment, looking forward from an investment standpoint, commercial real estate is a challenge. Other than the other thing from, and I know I hate to go back to the Rocky Mountain Economic Summit to bring this up again, is the process that we do know that's ongoing of onshoring businesses. That is still huge, a movement that we're seeing right now, especially in the semiconductor space, where we see onshoring happening. And so industrial production, manufacturing space is on fire as far as the real estate market goes.
Did you see Bianco? Was it Bianco's tweet yesterday? I think it was Bianco who tweeted here it is. Let me bring it over. And I'm not sharing remind me if I'm not sharing my screen. We're noobs at this. So, help us out here.
You're not.
I know.
Okay.
There you go. All right, get you off. So he's retweeting Lizanne Saunders so people that are fishing for the words in shareholder calls, the mentions of onshoring, reshoring, and nearshoring. This sort of goes to the narrative of reverse globalization. So all the jobs that we're going overseas and we're getting a distributed just in time supply chain, that these are the counts of the buzzwords: onshoring, reshoring, nearshoring. This was yesterday. He retweeted this. So by the way, I'm going to put a plug in for Bianco. Everybody needs to listen to Bianco's podcast. The guy thinks at a different level, sees things differently than other people. Arbor Research, Talking Data. So subscribe to Talking Data podcast. He's a little like Peter Boockvar in that his podcast is no more than 15 minutes. Unlike ours, which is, we've already been how long have we been talking here? A long time.
Almost like 45. So
okay, so we're gonna go longer than them because I can't say anything quickly. Hopefully people enjoy this conversation as it's going. Give us some feedback if you like it, by the way, plus or minus. Maybe we'll figure out a way to get these shorter. But Jim, I like Jim because I don't have to listen to him for an hour and a half to get the point. 10 or 15, if he can say it in 10 or 15 minutes. So a lot like Peter Boockvar. You should be listening to Bianco. By the way, both of these guys said, hey, maybe one day you guys come and hang out and chat with us and talk with our community. And both of them said, sure, we'd love that. So hopefully in the future, we get one of those guys here. And then we could talk about fishing.
The guy we need to get here, because did you see the data out of China this morning? China GDP, Goldman Sachs came out and lowered China's GDP forecast from 3.6 down to 3.
Yeah.
Yeah, we need to get Leland here. Leland Miller from the China Beige Book.
Yeah, China Beige Book is, if you're interested in what's happening in China, he's the guy. Listen, the Chinese government, I said, Chinese government, you're reporting on local China growth regionally. Does the Chinese government, they don't subscribe, but I know they get it. And I know they pay attention to it. So the Chinese government doesn't believe in its own data. His data is much more reliable in terms of getting a feel for China. Yeah. Go ahead. What were you going to say about China?
Well, just at their number, based on their own party, they're supposed to be 5%. That's kind of their baseline that they expect their GDP to be at 5%. So Goldman's expecting to be at 3. China's obviously still struggling from their policy of how they've handled COVID. And keeping trying to shut down their economies in different parts of their country, and it's definitely having an impact on their GDP right now. So, anyway, I know a little
there's
bit.
Leland right there. So, China Beige Book. If you can find them on Twitter or find wherever. If you're specifically interested in China, it's good data, good person to follow. Yeah, good tip. So, especially if you're interested in anything in China. So,
hey, I want your opinion on something else, and it has nothing to do with Kotok. Are you trading Bed Bath & Beyond?
No, I don't trade any meme stocks. By the way, there's Bianco, and he's wearing the same. We got the same shirt. So, Jeremy Schwartz from Wisdom Tree. Back. So this, I can't take enough pictures of the sunsets. They're absolutely beautiful. This is Emily Taylor again with her bait. That day we did have a little bit better day, a bunch of smallmouth. We caught our limited smallmouth. Peter Boockvar, who's a dead fan.
We're lagging a little on your pictures. There we go. There's Boockvar and Emily. Finally came up.
Okay. What about that? Can you see that bucket?
Yep. The eel.
Yeah, we'll talk about that in a second. But this is what happens. This is what Camp Kotok's about, is really good wine and food and really, really good conversation. So it's Barry Ridholz, but this is what happens, is these conversations with people that are some of the smartest people in the world. But I wanted to show this tradition at Kotok, is if you catch an eel, the guide gets $100 bounty for bringing in an eel. Okay. They are nasty creatures. By the way, there's only one kind of eel in the world. They're all the same, whether it's saltwater, freshwater, all the same eel. So anybody who's had unagi or nago, it's this kind of eel that you're eating. So it's a little tough to deal with their slimy. What you do, the first thing you do is nail it. So there's a ritual at Kotok, is the newbies must skin the eel. So they nail it to the tree, and then what happens is somebody slices it. So here's Rick Newman. He's with Yahoo Finance. He's an awesome guy, but you watch out for him. He's like a buzzsaw. Like any reporter, he's going to ask hard questions. So he's got a reputation of asking hard questions. Emily, again, skinning the fish. The other thing for me, this is Ned Davis Research chief economist. I don't have Alejandro's permission, but to me, Alejandro is a rock star. You know, like it would be like for me meeting Beyonce or somebody. She's an absolute rock star. One of the smartest economists that are out there, lucky enough to hang out with people like her. And she jumped right in that eel. And so they cut it at first. And then they pull down the skin. And here you can see her pulling the skin off. There's General Scott Gray. This is John Kimmelman, who writes for Bloomberg or for Barron's and others. He's an independent reporter now, but we talked a lot about Barron's. He's a soccer fan, but you can see they're all good sports. And then we end up cooking the eel up and eating it. To be honest with you, it's pretty damn good fish. It's got a high fat content in it. So they batter it and fry it up. You got to be careful of the bones. But surprisingly, really, really tasty. They're just a mess and a pain in the butt to deal with. So anybody who's a newbie to Camp Kotok, you will be partaking in the eel skinning ritual that happens. I'll just flash that up. So this is a big part. Okay, flash real quick. Not going to tell you any names because they said don't share my name. Don't tweet that. But playing poker, as you might imagine, among some people is a big part of the game. I may or may not have played poker with the Supreme Court Justice. I'll just leave it there. More fishing. This is a big part of what happens at the end is sitting around the table and just talking economics and stuff.
We're still stuck on pictures. Like we're back on a fishing picture still. Haven't seen poker.
Oh, your audio is breaking up. I don't know if it's me now. Can you hear me now?
Yeah, I can hear you fine.
So your audio is breaking up. Your microphone's doing that thing again. It's David Kotok talking about some pretty cool stuff. And then my traditional, right before I get on the airplane, I go someplace and have a lobster roll. So that was my trip.
Cool. Is my mic better?
Your mic sounds a little bit better. Did we finish? So I mean, on the housing thing, I wanted to go back and loop back on the housing thing and why there's a dichotomy between existing homes and new homes. And it goes back to that discussion we didn't really finish on work from home. And the reason is now you don't need to, if you work in the city of Chicago, you can live in the city, you could live, in Oak Park, or you could be like me and live in Naperville, take the train in. Now you can go live in, Kansas, Illinois, which is in the middle of a cornfield nowhere because you're not commuting. So home builders, when they decide homes to build, they look at the businesses in that area and they look at the spectrum of salaries and estimate, they're looking at it. They got great economists that are looking at what are the average salaries, what are the job openings forecasted, and they can know, hey, they're going to hire, there's so many job openings, they're going to hire, a certain number of people. Those people are going to need homes. So based on their salary, we know what target price range to put the houses in. But that's not what's happening. Because you can work. My neighbor's daughter works for a big bank and she lives in Phoenix. She moved out there in COVID and they said, okay, we need you back in the office. And she said, I'm not coming back. And it's happening everywhere. There's people that are living and working. Like you're out in the middle of nowhere, not nowhere. Rexburg isn't nowhere, but you're out of.
Oh, it's pretty much nowhere. I mean, there's a small university here, but other than that, there's nothing but farmers here. And you're speaking exactly because I live in one of those areas where every time they build a house
to move, everybody go to Rexburg.
No, awesome, don't. It's actually horrible. The winters are awful. There's like 6 feet of snow in my driveway every winter, and
don't come to Rexburg. It sucks.
25 below zero, and
That reminds me of the shirt when we were in Jackson. It said, Jackson sucks, tell your friends.
Yeah.
Don't go to Rexburg, everybody. Did you get the memo? Don't go to Rexburg. Because your house is what you want to talk about. I mean, you get an anecdotal, right, on your house?
No, yeah, housing it's crazy. I mean, housing prices here in the last 3 years have literally doubled. They're not just up the nationwide average is huge as well, right? Chris Waller at the economic summit that we went to in Idaho a couple of weeks ago mentioned that, home prices across the nation are up 45% in the last 3 years. Unbelievable move. And his point when he was talking about raising rates is if we see a 25% correction in home prices because of as a consequence of them raising rates, well, people are still up in the last 3 years on their homes pretty significantly. And so they don't view that as an economic shock if that's a result of them raising rates. But where I'm at, it's even more than that. And I know I'm not the only spot in the world that's like this. Denver, Colorado is another one that's just exploding right now. Phoenix, Arizona is another one that is exploding right now with demand for homes. And, Utah and many other places. Most of them in the Rocky Mountains, to be honest. That's one of the really hot spots. I think you can throw Miami on that and Texas, parts of Texas on that as well. But to your point, the reason for that is this work from home situation. Mm-hmm. There are so many people, my neighborhood alone, and I was telling you this yesterday when we were talking, my neighborhood alone, I know there are 3 executives that left Seattle who work for Microsoft who are not going to go. They're still working. They're still full-time employed. They're never moving back to Seattle.
I can't imagine what would change to make that happen. I don't know how, this is why home builders are not seeing, I think home builders and commercial real estate, I'm not sure how to play this. I don't know. There's an opportunity here. It'll be all clear to us 2 years from now. We all should have done this. But I think this is real. I don't think it's changing. But there are people who are in denial. I mean, maybe I'm wrong. But given the current unemployment, and even if you look at a home interest, 30-year now, up to around 6, I'm not sure what the last numbers are. For most of my adult life, a 6% mortgage was a good deal, except for the past 10 years, right? So people are bragging about getting maybe a 2 handle on their mortgage. That's 3% is not unheard of for a 30-year fixed in the past 10 years. So 6% is doubled. But if you go back in the long-term rates of 6% is not bad. If you go back 30 or 40 or 50 years, I mean, our parents will tell us about paying 14 or 15 or 16% for a home mortgage because that's all they could do.
It's an interesting dilemma. So let's put this into perspective of economic impact of housing right now, because I think there's a couple of disconnects. I think the Fed raising rates is going to slow housing down. We're seeing that. Even in some of the hotter markets, we're starting to see homes sit on markets a little bit longer. And I don't know if that's because people are still asking astronomical prices for their homes that they're trying to sell, but they aren't moving quite as fast as they were. But I think the biggest challenge, right now is what are going to happen to those home builders who are sitting on that excess inventory from some of those homes or from some of those areas where they've used their past economic forecast models to build those, and what's going to happen to home prices in those areas because of the excess inventory. What's going to happen to the companies that are sitting on those homes forever, ever? They have to start cutting prices to move them. Are you going to see builders and developers facing foreclosure risk and liquidation? Let's be honest. I mean, I know we don't have the same type of leverage that existed in 2006, 2007. It doesn't exist out there, especially in the individual place. But the nature of real estate development, however, even in a conservative way, is still using huge amounts of leverage. They're going in and buying properties and building 500 homes. And if their forecast model is wrong and they're sitting on 500 homes that they have a, $500,000 cost in each one of them, that's a lot of money.
And typically they're financing on short-term rates. And if short-term rates, they hold up properties longer than expected, and the short-term rates go up, that's going to directly impact the bottom line. I mean, that's a very simple thesis, a very simple explanation for why we saw the market pull back in December, is that cost of business, the weighted cost of capital went up because the Fed raises rates. So that's a very simple explanation for why the market went down, is that just rates went up and companies have to pay more. So interesting with home builders, how that's going to play out. I used to trade homes quite a bit, and it's been a while. I'm still afraid to get back into the home. I loved Lennar and Pulte. They're still on my watch list. I keep an eye on them. But I'm a little bit nervous. One other anecdotal piece of data too, by the way, and this was, Bianco lives in Chicago downtown, and there were several people from New York talking about public transit numbers. And this is another, I like to think from the scientific method, and that is you observe the data, you make a hypothesis, and then you test the hypothesis with the data. And another piece of this work from home puzzle, this real estate puzzle, is if you look at public transit data, we're about half of where we were from 19. These people riding the train, and that's so a lot of people who are going to live, out in Naperville or in Wildwood, New Jersey, or wherever, commuted to the city. I don't know if Wildwood's their suburb. I heard that mentioned last week. So maybe Hoboken or whatever the suburb is that people live in outside of the city, or maybe Long Island. But they're all saying that transportation on some of the lines is about half, and you definitely are seeing it, which does present another issue for revenue for those authorities that run those. So interesting, but so there's another problem there, but it's another data point showing this work from home thing is real, that people aren't commuting, and maybe they're moving away. They're definitely not using public transit. The other thing that's happened is crime numbers have seemed to have gone up quite a bit. And so that's a reinforcing thing is it was said independently, both New York and Chicago, that the people, why do I want to get on a train now? It's another reason not to get on a train. So it's an interesting, there's something here. There's an opportunity here.
There is.
Let me switch to a couple other things that were talked about. One was the SPR, the Strategic Petroleum Reserve. So I got to fish with a person, and we were talking about the SPR. And I said, is it really true that the DOE, blah, blah, blah? And he says, well, Eric, do you know what I used to do? I said, no. He said, well, I was appointed by the president to run the Strategic Petroleum Reserve. I said, oh, so you really understand how it works? He said, yes, I do. And so
let me reference not our current president, a past president, right?
A past president, yeah.
A past president. Okay.
Chatham House. I won't say the name, but there's. He's not somebody that's typically well known, but he definitely has insight in the SPR. So, Greg, do you know how? So we have these salt caverns that are hundreds and hundreds, so football field wide, and then like 3 times the Willis Tower, which is the Sears Tower, tall. So we got these huge tubes that are made from salt caverns. The way we make them is we flush water down into the salt cavern. The salt dissolves, and then we pump out the salty water, and we do that enough time to get these caverns, and then we fill it with crude. So do you know how many times we're designed to use those caverns? How many times is a cavern designed to be used?
This is fascinating, folks. I already know the answer. Eric told me yesterday, but
6 times.
6. Yeah.
6 times.
Fascinating.
And the reason the SPR was created was to address when there's global crises like war and other issues, is why this is created. So we have used the SPR. 200 million barrels have been pumped out of the SPR. I think that's the number is correct. I'm going off of somebody else. So
and let's be honest, I'm going to say exactly why it is. It's because we're in a midterm election that if they don't get the inflation numbers down, the current administration, there's going to be an absolute bloodbath of Democrats losing seats in both the House and the Senate this fall. And I believe it is a massive failure of going in and tapping the Strategic Petroleum Reserve for the sole sake of trying to battle inflation. That's not why it was created. Because what happens if, and again, I'm not saying that this is going to happen necessarily, but what happens if we drain our Strategic Petroleum Reserve right now, trying to lower the price of gas at the pump so that we can get people reelected. And at the perfect time when it is drained and we haven't refilled it yet,
all of a sudden an actual world war breaks out and we can't
ship. What would make you think there'd be a world war? Why would?
And we can't ship oil from Saudi Arabia or Venezuela or Russia to refill that reserve.
So, by the way, the type of crude that we took out of the SPR is the heavy crude. This isn't the sweet light crude that we drill for in the North America. Do you know where we bought that oil that we took out? Do you know where it came from?
Venezuela.
Or Russia.
Or Russia, yeah. One of the two. Two great places, right?
Mm-hmm. Yeah. Just interesting anecdotes that our administration has recently visited Saudi and Venezuela, right? So I think that's interesting. I wonder what's on the agenda. So speaking of international, just a quick aside about Ukraine. There's this this narrative that Ukraine is the fourth largest exporter of grain. That's true in terms of export, but we make a hell of a lot more grain. So this isn't going to affect us. If 100% of Ukraine's production and Russia's production of grain went down, it's only going to affect us in isolated areas. For example, grapeseed oil. We get grapeseed oil from the Ukraine. So if you buy grapeseed oil or it goes into a product, that's gone up. But we are a net exporter of food, and we have plenty of capacity. It's not going to affect us here in the United States, but it will have an international effect. And guess who buys the grain from Ukraine? Saudi Arabia and Egypt. That's where the grain from Ukraine goes. So I wonder if part of the administration's agenda was to talk about that, and then also a trip to Venezuela. So, I don't think we get to know what the whole agenda is, but I would get that grain and oil was in both of those discussions to see how that plays out. But
talking to that point, I want to talk about food prices on that just a little bit, because I think you're right. I think the story about Ukraine and worldwide food shortages, and we're going to see prices go up here drastically. I agree with you. I don't think we will from that standpoint necessarily, because our yields this year, by the way, I've kept in touch with a handful of big corn grower associations and wheat associations right now. Our yields here domestically this year are going to be bumper crops. We're crushing it. The farmers are growing amazing food this year here domestically. So I agree, we're going to have plenty of supply. The biggest question that they're all concerned with right now is what fertilizer prices and fuel prices are going to do to next year.
Right. So potash is one of the things that's an input, but there was a VC there, somebody who runs an ag related you hear about corporate farms. He's the corporate farm. So somebody sells a farm, he's going to go buy it. And he also does some investments into some technology. Long story short, I'm not a big, you're more of an expert in this area, but potash does come from the war-torn region right now. And his thought was that most of it goes to Brazil, I think. I may be mistaken, but there could be, some ramifications that could, because we do import stuff from Brazil. Some stuff comes from Brazil. So there could be, the potash thing is something that could be an issue due to Ukraine, to like second order effects. I don't know. Have any thoughts on that, or maybe?
No, I agree. I think it's the input costs for farmers right now are really high. I watched a little blurb of a lady, and this is just an individual small farmer who was talking about input prices right now. She said, right now we're not feeling it from a yield standpoint. She said, but let me give you an example. And she just opened up the back of her truck, and she pointed to 2 bales of hay and a bag of feed that she had in there. She said last year, each one of these bales of hay were $4. The bag of feed was $6. So this is what it takes, she said, to feed one cow for a day. Her from a cow and a calf for a day. So it was $16. She said this year, $14. 2 bales of hay at $4, bag of feed at $6. This year, the bale of hay is $12. The bag of feed is $20. So now, instead of looking at $14 total, I'm looking at like $45 to feed those same 2 animals. She said, so prices are going to go up based on our input costs, because they said we can't afford it. We can't afford to eat that cost as a producer of this food and not pass it on to the
Time out. We got to
consumer.
talk about something really important here.
Okay.
Did you buy that pellet grill?
I did. It's still sitting in my garage, and I haven't even plugged it in yet. I went camping. I need to.
Well, when the weather gets cooler, maybe you fire that thing up. But Costco has had a Packer brisket on sale. Prime, the best you can get. Prime, the best meat you can get. Not choice, prime. $3.99 a pound for a Packer.
What?
Brisket.
I better go check.
What?
I better go check my Costco.
Yeah. And this,
I'm going to Costco after we're done.
We're talking 18 pounds of prime brisket beef. Now, the brisket comes from the pectoral muscle of the cow, and it's something that gets used a lot. So it is a stringier meat. It is a tough meat. You have to cook it. Can't cook it like you'd cook a sirloin or a ribeye or fillet. Those are much more tender cuts. This requires a lot more slow cooking, and the pellet grill is absolutely insane way to do it. I have made Packer brisket twice, and I have had people say it is the best piece of meat I've ever seen. Slow and low. And Greg, I'll give you the recipe.
I was going to say, send me your recipe.
I will coach you through it. It is time. You know what? There's two keys. One is what they call the Texas crutch, where you put it in foil, put a can of beef consomme, let it sit there for a few hours. The other secret is the rest. And you take a Coleman cooler when it's done, when it reaches the right temperature, you wrap it. You take the foil, put it in a towel, wrap it in a couple towels, and put it in a Coleman cooler. But it's not to keep it cool. It's a thermal insulator, so it stays hot. And you leave it there for 5 or 6 hours.
Oh, wow.
Yeah. And that's that. Colin, who's behind the scenes and maybe listening to us right now, he is, if you have a question about anything, you ask Colin, and he probably already. So I asked, hey, Colin, I'm interested in pellet grill. So he's telling me about the politics of the companies from. These people left Traeger, they went to here, and they formed this new one, and this has this new technology, and here's why. So the Pit Boss pellet grill, Greg and I both have a Pit Boss. I think they're fantastic grills. But this beef, I've done it twice, and absolutely amazing. I mean, it's restaurant quality, really, really good. Very simple recipe.
Awesome.
So back to the input.
It's seriously, it's almost lunchtime, and you're talking about brisket.
Oh, it is lunchtime for me, and I'm thinking I want beef. So back to the SPR and input costs, because this is related. So oil is a big part of it. So nitrogen and other fertilizers for farmers, but oil, of course, the price of fuel. One of the things that came up in this meeting that I've not heard talked about anywhere is that the DOE is proposing, there's proposed language that they're going to change the way that they buy the SPR. They buy oil from the SPR. They currently buy it at spot prices. And what they're going to do is essentially some sort of a collar trade where they can buy at the futures. So they do not trade futures, but they are talking about buying futures now. So they can say, we need the oil in January. So we're going to buy the January at $85 a barrel. And it is such a large purchase that it will put a floor in oil pricing.
Yeah, that works so well when the government has tax dollars to play in publicly traded markets and, create reality, right? I mean, we're talking COVID again. We're talking tax dollars. I know it's not on the same scale, right? But this is still a pretty massive amount of money that's going to completely manipulate a publicly traded market.
Let's be clear. They sold oil, so they're going to buy it back. And if they sold it in the past 6 months or 3 months, it's been more than 85 a barrel. And that money normally goes right to the treasury, or sometimes it goes to SPR improvement products. And but this new language, which I haven't seen anywhere, I haven't seen where it's out there. I'm sure it's someplace in some public filing that's pretty obscure. But it is going to change the future of oil, and it will impact oil markets. So we need to keep an eye. I don't like oil related products because the oil tends to be volatile and the whole stocks move around. And there's a lot happening in oil companies, and Buffett's latest thing where he's now got a huge position in Oxy and also bought a bunch of Chevron. I know you trade oil, but I think there's something there. I think there's, the part of the narrative is that we're going to see a floor in oil.
Maybe it's in the Inflation Reduction Act that just got passed into law today.
Yeah,
because I'll be honest, I haven't read it.
Yeah, I don't know where that is.
Does anyone read full? I think that's kind of the intent, right, of Congress right now, is to make their bills that they pass so massive that we just don't have the time to read them. Sorry, I'm kind of negative government today, aren't I? Maybe I need to.
Hey, I'm all about smaller government.
Maybe I need to go fishing.
You know that I'm well, let me actually show you. Because I happen to have it here right underneath my camera. I am a card-carrying member of the Libertarian Party. So that's.
I thought you were going to pull out your card-carrying capitalist card.
Oh, yeah, I can pull that one out too.
I have mine. It's just not within accessible reach of my desk right now. I'm a
card-carrying capitalist as well.
There you go.
With the legends, Warren and Charlie on the back there. So yeah, shareholder in Berkshire Hathaway, attended the shareholder meeting. That would have been a good podcast to do, the shareholder meeting this year in Omaha. It was pretty cool.
We'll get it next year.
Yeah. The other notes that I had, Catherine Mann, who's on the Bank of England voting committee, who was on the record here, was talking about inflation. So there's an inflation forecast for UK that has, you saw this last week, I know, over 13% forecasted inflation. They think they're going to continue to see inflation peak, and got a lot of attention. She explained part of the reason for that is that they use an index like CPI. We use CPI. They have a different acronym. It's a 3-letter acronym. I think it's CPM or CMP or something, that is a bucket of products. So the CPI looks at everything from rent to cupcakes and everything in between. And there's a weighting that's put on all of those items, and they look at the prices and they come up with an index of where we are. We talk about core, which is taking out the volatility that happens with oil. It's fuel that comes out, and what else comes out of core? What's not included in core?
Food.
The other one? Food. So food and oil, which they tend to be more volatile and they're related to each other. Not that core is, people say, oh, you're only looking at core. And the reason is because it's less volatile than the overall headline CPI. Anyways, in the UK, fuel is a big part of it. And the way things work in the UK is they have cap prices on electricity, and it's only can be adjusted every 6 months. And so we know what's happening in the UK and Europe with energy. I have family who lives in Germany. They're buying stacks and stacks of hardwood. They actually, my wife's second cousin went to the bank and got stacks of gold bullion. So they're a little bit freaked out for understandable reasons why. If we look at the recent data, what's happened in natural gas is hitting all-time prices. So we are exporting fuel. Corpus Christi's biggest customer now is Europe. So we're seeing some very significant changes that are happening here. But in the UK specifically, electricity prices are set by regulatory caps. We know they're going to go up, and that's the reason for the forecast of higher GDP. It's all due to electricity prices, which is very clearly going to continue to go higher. And then they're seeing inflation turn away in 2024, 2025, that they're going to see the back end of the curve. And that's pretty universal. I saw a piece yesterday showing central banks forecasts around the globe, whether it's the ECB or even the People's Bank of China, the Japan Bank, internet, and of course the Federal Reserve, all forecasting much lower. Basically, inflation goes away in 2024, 25. In the UK, at least, Catherine Mann explained the reason for that is we're looking at future pricing, and the future prices of fuel and electricity is showing that it's going to drop then. Is it right or is it wrong? I don't know. I'm just telling you what she shares, and they believe that markets probably have it right.
You know, there's an interesting disconnect that I've been thinking about lately about future inflation specifically. And I've never really thought about it because in the past 20 years, because we haven't had inflation. But one of the things that it came up at the FOMC meeting a few months ago, where they talked about expected inflation in the future. And even, Governor Waller brought it up at the economic summit we went to, that there's this expectation of future inflation that's lower. And he used that to justify the inverted yield curve right now. that say that that's actually a good thing. But then as I've dug into this, okay, well, who sets that expected future inflation rate? And the only thing I've come to is it's based on surveys. It's based on surveys that they're doing of households of what they expect inflation to be like 6 months from now, a year from now. And I'm thinking about the basis of that scientific study going, who the hell knows? If you got a phone call that said, hey, what do you expect inflation to be a year from now? You're a brilliant guy who spent a lot of time, researching economics, and you could probably answer that a little bit. But the average Joe who goes to work and punches a clock 40 hours a week, doesn't even really invest other than through his passive 401k. You ask him a question about inflation a year from now, what's he going to say? Yeah,
obviously, and he is absolutely bombarded by every media channel that in your face inflation is going higher. I mean, it's all over social media. It's all you hear in the news. Even your local newspapers are talking about it. I mean, it's real. There's no question it's real. But you're gonna blast somebody with a message that inflation has become the number one issue in America. So polls are showing that is the number one concern. It's not. I mean, it's not maybe it is a real problem, but it's certainly front headlines, and you're being told that it's the problem. We're all impacted by these messaging. So I think there's something to be said for like, you're right. I mean, you're going to ask somebody on the street, you're going to say, this is a problem, this is a problem, this is a problem. And then you say, what's the problem? Whatever I was just told. Yeah.
Well, and then tell me a year into the future, do you think it's going to be higher or lower? I don't know. I know who's starting the World Series this year. I know who's starting who the Rams drafted this year in the draft. That's about all I know, right? That's what the average guy. Anyway, I guess I'm looking at this economic study, questioning the feasibility of it, but yet our policymakers rely on it pretty heavily to justify saying, oh, we think future inflation numbers are going to be lower because of this survey. And I'm looking at the survey, questioning its validity.
You and I have had opportunity to talk to the central bankers who are actually doing the forecasting and looking at these numbers. They're humans just like you and I. And I'm glad that my job isn't putting out the forecast that has to get published, at the Fed level of where things are going. They're doing the best job that they can. I think the Fed deserves some criticism, but I think they get a lot more than they probably deserve. And it's kind of cool to beat up on the Fed and call them stupid, but they're not stupid. They're trying to do the best they can. Coming from a libertarian, that's, and the Fed is, I would be happy from a personal standpoint, maybe, but it would change things dramatically in our economy. And they're, given the set that we have, I think we've got good leaders that are trying to do the right things. Speaking of books, so I just finished Nick Timros's, I think I mentioned this. Did I mention this to you before?
You were reading it. You didn't
$1 trillion Triage.
Yeah.
So I thought it was fantastic.
Yeah.
By the way, I'm reading Bond Kings right now, and the question that we had with Paul McCulley, let's not go there, but I think it will be answered in the book. Remember when we were talking to Paul? We won't go there.
Yeah.
If it's in the book, we'll talk about it. But you and I had a conversation with Paul, and so he didn't want to discuss a certain thing, which was fine, but I think it's going to be covered in, so Bond Kings. The other one that's on my list, which is going to be the antithesis of Nick Timros's book, is the something the free money, or I put it on my Amazon list because somebody was telling me up there to read it. No, shoot. The Lords of Easy Money. So I think that's the Lord, or is it Lord of Easy Money? The Lords of Easy Money, How the Federal Reserve Broke the American Economies. Chris Leonard. I think that's going to give a different perspective than Nick Timros does. But I'll tell you one thing for everybody. If you're not following Nick Timros, it was joked around that he is the actual Fed president. So he's the Fed whisperer right now. Follow Nick Timros. I read everything he publishes because it's very well understood that he's getting, that the Fed is making an effort. It's not a secret to communicate to the market, and they're keeping an eye on that. And one of the channels they use is the Wall Street Journal and Nick Timros. So it's not a conspiracy or anything like that, folks. They're trying to communicate to us, to the market, what they're trying to do. So we're not surprised. And so I think that's really changed, and maybe explanation in part for why we've seen the money getting better. But yeah, I mean, the market's getting better. One other thing to talk about, unless I guess maybe, I don't know, I'm not going to talk about that other one. We talked about a specific stock from a specific well-known CEO that something might actually, I'm not going to share that. I'll keep that one for private because it's a little bit, yeah. But yeah, I don't know. Yeah, let's
not Bed Bath and Beyond. It's not Bed Bath and
Beyond, but it's kind of it's one of these high profile stocks. Maybe I'll share it.
All right.
I'm not ready right now. I just this is completely, it's part of the narrative that we talked about defense spending though. So we did spend a lot of time talking about what's going to happen in Russia. And there's a lot of different opinions. I mean, there's people out here saying, let's go kill Putin. That's, first of all, there are 3 oligarchs. Somebody pulled me aside who's foreign affairs expert at this conversation. He kept his mouth shut during the open table conversation, but I knew he had foreign affairs experience. And I said, what would happen if we killed Putin? He said, there's three Putins right behind him. There are three oligarchs that we know who they are, and they have exactly the same agenda of Putin. The effect of what happened in Ukraine would be if Russia put weapons in Mexico and then pulled Canada into the Warsaw Pact in World War II, that is effectively what's happened to Russia. When the wall came down, Reagan promised Gorbachev that NATO would never be on the border of Russia. And that promise has been broken. And I think from that perspective, you can understand where Russia's coming from. The conversation that was up there is that this Ukraine thing, we could still be in this a decade from now. And how is that going to play out? And how, for broader sense, hey, maybe we get, I don't know, Jonathan Ward on here to talk about China and Taiwan. That was kind of discussed on the fringes, but just as a trading idea for people, defense spending is probably going to go up. These billions of dollars and stuff that we're sending. By the way, when we decide we're going to send a howitzer to the Ukraine, when the president authorizes it, it's in the Ukraine 3 days later. So the logistics is pretty amazing on how that's all happening. And defense spending, there will be some companies that are probably going to do well if we're going to be in this for another decade, like another Afghanistan or Iraq. We could be in this for a long time, and there are certain companies that will probably do well from this. I'm not 100% sure. I don't trade defense companies, but there's something there.
I trade a handful of defense companies. I think there's the list is not really that extensive, to be honest. I mean, you've got Lockheed Martin, you've got General Dynamics, Raytheon,
BAE
Boeing.
Systems.
Those are some of your big defense players. Yeah, BAE Systems. It's a pretty short list, to be honest. And I agree 100%. I've been long most of, I shouldn't say most of those. I've been long defense stocks for most of this move that's happened. And it's I agree. Unfortunately, I agree that it's what I've read as well, similar story. I don't expect this conflict to be over anytime soon. If it is, that means Russia's won, and then they'll move on to their next target, I believe. I think that's the only way it ends soon, as if Ukraine ends up folding. Hopefully that's not the case.
Well, you are lagging.
All right, we can't end on a dark note like that. That was way too depressing.
My internet's acting a little bit weird here, so I've got Comcast, so maybe we should short Comcast. I don't know. My speed's going all over. Now it looks like I lost you. I don't know whether I'm disconnected or you're disconnected. So yeah, that's I'm not sure if Greg's gonna pop back, or maybe Greg is doing the same thing I'm doing right now, wrapping things up. So a lot of thoughts. I know this was a little bit long, but there's a lot of good ideas and comments in here. Hope you enjoyed this. This was probably longer than they mostly will be, because we just had 5 days and didn't even skim the surface. or just skim the surface, didn't go deep at all at the sort of conversations that were discussed here. I actually had a lot more to talk about. There were some interesting discussions about treasuries and trading there and why we're seeing inverted yield curve and the forecast for recessions here. And is it going to be a dip, double dip? What's the duration going to be? There's a lot of discussion there. But I appreciate everybody listening to the podcast this far. Welcome. Please hit subscribe and like, share with people, provide feedback to us. You can email me at eric@traderoasis.com or leave comments below. Want to see if you want more of these. I don't have any more conferences coming up here anytime soon. So we're going to just be talking about what we're seeing in the markets here on a regular basis and, as it's appropriate. And based on what feedback we get from you folks, we'll determine how we're going to do these and maybe change the format. So thanks again for taking your time to listen to the end. Everybody be safe, and I look forward to seeing you again real soon.